Hello, everybody, and thank you for joining me today. It's Allan Laboucan with the Rocks and Stocks News Show. I had a few days off there for holidays, but I'm all charged up and ready to go. Seeing some interesting things in the market that I believe we've got a perfect storm really developing for the price of gold and silver, copper, other metals. In that, the biggest arguments that I have of why I'm bullish, somebody on Twitter earlier today asked, what are your three main reasons that you're bullish on gold? And the key one for me is that, it's a combination. One and two might be two and one, I'm not quite sure, but the thing that's really moved things lately is the banking crisis that started in early March. I really believe that we're just in the earliest days of this, what I believe will be a contagion. These problems, they don't just go away quickly, no matter if the Federal Reserve backs up troubled banks with their depositor insurance. That goes beyond $250,000, or they even talked about the possibility of backstopping all bank deposits. That's an $18 trillion backstop. I don't really see how that can happen. Sorry, I got something going on here. Oh, sorry. The other thing that I really think that in the 2008, prior to 2008, there was the sort of precursor to that economic correction was the asset-backed commercial paper blow up, and it was several months until the economic crisis came into play in 2008. But really, these things they kind of give you signals of what's to come. And the banking crisis, I think, is as I said, just getting started. And there will be spillover effects that affect others, because the Silicon Valley banks of the world and these others that had problems weren't the only ones with sitting on large amounts of bonds, long-term bonds, and real estate, mortgage-backed securities. In fact, not one of the largest holder is the Federal Reserve itself. Has a portfolio of assets that looks very similar to what the Silicon Valley banks of the world had. And so I think there's a lot of problems that are just starting, and we're going to see that spillover. It's still not, and it's not just the banks. There's other institutions out there that are holding similar assets that are quite underwater. One of the things that just blew me away was that the Federal Reserve and to guarantee to try and stave off a some serious banking crisis was to allow the banks that hold these underwater assets, some quite significantly, are allowed to borrow money at par when those assets are quite underwater. And that doesn't make for a sound system as far as I'm concerned. The other big thing that I think is going to affect the price of the US dollar, and by extension, as the US dollar is under pressure, it will be very bullish for the metals led by gold and silver, copper, and others that will join the golden party. The reasons that I see that the that the Federal Reserve will stop raising interest rates is you've had problems in the housing market, car market, automobiles, big ticket items, and now to add to that problem is the credit cards. You know, a lot of people are relying on their credit cards to make ends meet, and they're paying 19% interest on average. You know, that does not for a healthy economy make. The other factors are the commercial real estate market is it's been in problems since the COVID crisis. A lot of people left the office and have never come back, and a lot of those mortgages are that backed up those commercial real estate are going to have to be rolled over, and they were having problems with near zero interest rates on their loans. Can you imagine what they're going to look like with 5% interest? What I really think is happening is the Federal Reserve is breaking things. They do not take credit for the inflation that they helped cause, and in a big way helped cause it. You know, after 14 years of near zero interest rates, they jacked interest rates up to near 5% now, in a very short period of time, and they haven't allowed any meetings to go by to see how those interest rate increases are affecting the economy. And I really think they're overdoing it, and they helped cause the inflation, and now I think they're going to help cause the deflation, or the economy slowing down quite dramatically. And you know, a lot of these smaller banks are you know, they're seriously affected by the actions of the Federal Reserve, because they've been buying into the narrative that you know, they weren't going to raise interest rates, and built up their asset base based on that. And then they got a pretty serious problem when they raised it up to 5%. So I think the Federal Reserve is nearing the end of its rate hikes. I can't see them doing more than one. I really think they're making a mistake to continue to do those. The last meeting was the last two meetings were quarter point moves. And maybe they'll do one more quarter point move. I don't know. But, you know, ultimately they're creating some serious problems. They're breaking a lot of things now. And I can't see them, you know, continuing down this road when they're breaking their favorite child, which is the banks. You know, we're now seeing that the deposits have never seen as rapid of a drop as they have in the history of banking in the United States. And so, yeah, it's just breaking a lot of things that I think are problematic, and will cause the Federal Reserve to have to stop raising interest rates. And then the third key reason is one that's not talked about a lot, but I think is a big factor in what's going to happen with the US dollar. And when an animal is sick or weak or old, its predators will pick on it, will go after it. And I think we're seeing that in the currency wars that are taking shape now. You've got the BRIC nations and other blocks are you know, seeing that the US dollar's dominance as the world reserve currency should have some competitors. I think it's healthy for the global currency markets and the global economy. When you have one for such a long period of time that dominates all the international trading, that has to first go into the US dollar and then into and then used for trade, I think is not a healthy thing. And so these, you know, China, Russia, the BRIC nations, they're all starting to see that the federal or that the US dollar is old, tired, weak, and they are predators, and they're looking to take advantage of that. And the thing that I think is really important for investors to also pay attention to is that these central bankers are also big buyers of gold. So in effect, what they're doing is they're backing up their holdings, their assets with gold. They're going on somewhat of a gold standard. And, you know, they're really showing their cards to investors out there that, you know, they see what's going on with these the problems with the Federal Reserve and other issues, and they feel that they don't want to hold as much US dollars and they'd rather hold gold. And I think that this is a precursor to the currency wars that are now in full force. You know, many countries are wanting to join the BRIC bloc, if you will. And I think that, you know, I'm not trying to make the case that the US dollar is going to die. I just think it's going to have competition. And that competition, I think, is going to be very bullish for gold. One other thing that I was thinking about when I was taking my holidays this last week was that it strikes me that a lot of the bullish people on gold and other commodities, you know, fall into this category where they believe what's been said for many decades, that, you know, gold should be 10% of your portfolio in a diversified portfolio. First of all, I think diversification can sometimes beat diversification. Yeah, it will protect somewhat of your downside, but it will also cap your upside. And but that 10% number, I think it's bad advice myself. I believe that, like Warren Buffett, when he sees something that's out of balance, he takes advantage of that and he goes in very heavy. And I think investors should do the same thing with gold right now. I really believe it's a perfect storm for gold to go up. And I also believe that the economies of the world, the inflation, the debt, the money printing, are all pointing that you should be, as investors, I believe investors should be taking much larger positions in gold to protect their money. And to grow their money, I think that they should be looking at owning gold stocks, metal stocks that are tremendously undervalued right now. And therefore, I think that that's where you're going to get real torque that will help you to outperform your peers. You know, and when it comes to diversification, I would, you know, the only things that really would attract me right now are being short the big caps, in the Wall Street stocks, short the US dollar, long gold, maybe if you want some very short-term debt, treasuries could be a good position. But, you know, that's the kind of portfolio that I think that investors are going to be well rewarded for taking those kind of positions. So before I get into some of my picks, and I have about over 20 picks that I wanted to talk about, so I'm going to break this show up into two. Today's Saturday, the 15th of April, and I'm going to do half the list today and half the list tomorrow, Sunday. But before I get into some of the picks, I wanted to share a screen here and talk about the US dollar, primarily because, you know, contrary to what a lot of even bulls on gold, many of them want to deny the fact that what happens with the US dollar is a primary driver of what happens with gold. Gold and silver and other commodities that are priced in the US dollar tend to go in the opposite direction. So if US dollar is strong, like it was for much of 2022, the commodity prices, the gold and silvers and others are under pressure. But then when the US dollar gets under pressure, it topped out here in late September. Then it's went under serious pressure. In January, went through a death cross. Also had a very negative January effect. Then it had a rally as some economic numbers came out, and I think the currency traders believed that the Federal Reserve was going to at least keep going with 50 basis point moves. And it got a rally going, but then the banking crisis hit. When the banking crisis hit, the US dollar was trading, let's say, close to 106. And now it's back down to 101.5. It's now trading again well underneath the 50-day moving average and the 200-day moving average. What I would also point out is that you're going to kind of see the trifecta of bearishness here, with the 200-day starting to trend downward. The 50-day is going to resume this downward pressure, and the price is below both the 50-day and 200-day. And so I think that US dollar is just looking for a reason to drop. And there certainly are not a shortage of reasons to drop. Now I'm going to look at gold. So as you can see here, as the US dollar was doing very well, gold was under pressure for a good portion of 2022, let's say the first 3 quarters. But then it had a substantial rally, went from, let's say, around 1620, rallied all the way up to 1976. And then went through a golden cross in January, had a very powerful January effect. Then the economic numbers in February spooked the gold price, or gave fuel to the US dollar bulls, and it came under pressure, traded below the 50-day moving average. I would point out that it did have a double bottom that was significantly above the 200-day moving average. And then as the banking crisis took effect, look at this move that it's made. It bottomed here at around 1810, traded all the way up to 2064, closed on Friday at 2015. Seeing some very bullish indicators here. As you can see, the 200-day moving average is pointing upwards. The 50-day moving average is on a very bullish trajectory, and the US dollar and the gold price is trading significantly above the 50-day moving average, and over $200, 216, let's say, above the 200-day moving average. So we're in a very bullish trend. But the gold stocks, and I'm not just talking about the small ones, the medium-sized ones, the big ones, they really haven't joined the party yet. And that's what I think is quite exciting, and why I'm so bullish on precious and base metal stocks, is that I think this party really started in early November. And as I said earlier, all the reasons that I believe that the US dollar is going to be under pressure are all very bullish for the price of gold. And so, again, I'll reiterate that I believe that investors will be well positioned to protect their money against inflation and all these other calamities that are happening by holding gold. Silver hasn't really joined the party quite as significantly as gold. Yes, it had a good run from November until then January it went sideways. It came off in February, traded all the way to below the 200-day moving average, but then as gold is blasted off, So has silver. Oh, I wanted to mention something else on gold. Let me go back to gold for a second. Um, and one thing that I think is really important to point out here is that you can learn a lot from pullbacks inside of a bull market. And, you know, every time gold got near 2000, in March, it got above 2000 and failed, came back down, tried it again in April, failed, came all the way down, made another move at 2000, failed, made another move at 2000, and this time it kind of banged its head against that wall. So that's the new resistance. But then it broke above the 200 or above the 2000 level. And on the couple pullbacks that we've had since it broke 2000, that old resistance is now support. And on Friday, it had another downward movement, but I believe that that's very oversold, and that come next week, I think we've got a good chance of seeing over 2050 and get in that 2050 to 2100 range. And I don't think we're very far from seeing some new all-time highs in the price of gold. So let's go back to silver. Sorry about that. I kind of started on silver and then got stopped. The silver price, as you can see, has been following to as it always does, but then it has the potential to significantly outperform. So as we saw with the 50-day moving average, it came off here, but now it's trending upwards. The 200-day is trending upwards, and you've got the price of silver trading significantly above the 10% above the 200 or 50-day moving average, and over $4 above the almost 20% above the 200-day moving average. So we've got a lot of good things lining up for gold and silver, but copper is also important. You know, it's the most critical metal that there is out there. It also had a good run from November until even into the end of January. Had a golden cross here, traded well above the 50-day and the 200-day. But then it kind of went sideways in February when gold and silver were getting punished. It did have some more of a correction in March, but basically since February, March, and into April, it's kind of been going sideways. But this is important here. Just in the last few days, it's popping up above the 50-day moving average. And throughout all of this period, it stayed above the 200-day moving average. So very soon, I believe you'll see the 200-day moving average start to trend upwards, the 50-day start to trend upwards, and the price to get significantly above the 50-day and the 200-day. Now, my bullish argument for silver is all to do with the electric vehicle revolution. Not only will that need a lot of copper and other commodities, but to get the energy to those electric vehicles, I think it's important to understand that the power grid is very old and ancient and in need of rewiring in the United States and other developed economies. And then the developing economies of the world are using a lot of copper to develop their economies. And so I really believe that copper is going to have an excellent 2023. And there's some great copper names out there. I've got a few on my list that I'm going to be talking about. So let's now get into some of those picks. And one of my key picks is I-80 Gold. I believe that I-80 Gold has a tremendous future ahead of it. And I believe it's going to see some powerful moves. as you can see here, when gold in November, when gold was going up, they were releasing important results from their Eureka Bonanza grade CRD that has an overprint of high grade to Bonanza grade gold. It's kind of like two deposits in one. And they came in at different times, but they followed the same geological structures to put these deposits in place. And they've been busy. They had a powerful move from, let's say, in early November, they traded as low as 220-ish. And then they ran all the way to over $4.20. So, you know, they doubled in price based on the move in gold and the combination of the great news that they were having out of their Bonanza CRD. Then they saw some normal, during January, what I would call normal selling pressure after such a powerful move. February came around and they went into under pressure, like the gold price and a lot of gold stocks. And they even traded below the 200-day moving average, but then the banking crisis hit and it's moved up quite dramatically. It broke through the 200-day moving average, through the 50-day moving average. It's trading quite nicely above the 50-day moving average and substantially above the 200-day moving average. I believe what you're going to see happen here very soon is that the 200-day, the 50-day, and the price are going to all be in a bullish trend. And the reason that I believe that is that they have been drilling since the early part of the year, and they have a bunch of holes to start reporting in the next couple of weeks. And a lot of that drilling has been, or all of it has been focused on their Bonanza grade CRD and targets around it. And they've actually given us some updates and some signs that they are expecting those results to be quite positive. They put out a news release, and the last interview I did with McEwen Mining, their CEO, his enthusiasm was quite well apparent, and I think he's quite confident that as they start their cycle of reporting their recent drilling from their CRD in the Eureka camp, that they're going to have a lot of great news. So not only do I think they're going to have the catalyst of higher gold prices, higher silver prices, more people coming into the sector looking for good opportunities, and then they're going to be delivering what I believe is a string of excellent news releases. So stay tuned for I-80. They got a lot of news pending and a great group of assets. I believe that the assets that they have are going to grow them into a 5 billion plus valuation company in the next few years. Right now, they're trading at about a $700 million Canadian valuation. And I really think they've got some the assets to grow quite a bit higher. In fact, because they are a sponsor, I'm able to do a lot of interviews with McEwen Mining, their CEO, and you can find those on my YouTube channel at Rocks and Stocks News, or also on my Substack at rocksandstocks.substack.com. And those interviews will give you a very clear understanding and an excellent place to start your due diligence. If you're not already a shareholder, I think you want to look at those to consider being a shareholder. I really believe it's a core holding type asset that will in the coming years be one of those assets that you, in a couple years, you won't believe it was as low as $3.46, and what a terrific opportunity that was. And that's where I see them going. Okay, another company that's not a sponsor but is a important pick of mine is McEwen Mining. why I like McEwen Mining, there are two key reasons. They have gold mines in operation, and at those gold mines, they've been doing a lot of drilling to for grade control and to also do work to bring their costs down. I think that that combination is very bullish for their gold mines. But what's really caused this big move from down here in August, September, when it was trading at under $4, and I did an interview with Rob McEwen from the company. What drove all of this move to now closed on Friday at $12.78 Canadian. This power move here that we saw a big breakout above the 50-day moving average in late December. It had a golden cross and has been performing exceptionally well and peer leading kind of performance. And a lot of that, well, most of that has to do with their copper asset called McEwen Copper. McEwen Mining owns 52% of McEwen Copper. And McEwen Copper is a very special project. It's one of the top 10 undeveloped copper deposits in the world. It has in the preliminary economic assessments that were done in the past, they estimate that it has over a 35-year mine life, and that it will be in the bottom quartile of costs to produce copper in that top 10 group of companies. So it's got excellent economics and long mine life. These are the kind of things that major mining companies need. They don't want, they need these deposits because a lot of the copper producers are having troubles securing the supply that is going to be needed to feed the demand going forward. And they had a couple of interesting wrinkles to their story in that they got a big investment from a division or a venture of Rio Tinto, one of the world's largest mining companies, in that they have this venture called Newton. And Newton is looking at proprietary technology to increase the recovery of copper and also do it faster than other known methods. And so they did an initial investment, 20-some million dollars, and that gave them the ability to start analyzing using their technology on McEwen Copper's deposit. And after they got started that process, they did another investment of $30 million. On the same day that announcement was made, Stellantis, which is a big car manufacturer, Dodge, Jeep, Maserati, Citroen, Fiat, all these cars, they make all these cars, put $150 million into the company, into McEwen Copper. So the structure of McEwen Copper is 52% of it is owned by McEwen Mining. Rob McEwen owns around each entity. Rob McEwen, Stellantis, and Rio Tinto's Newton own an approximately an equal amount of 14% each. So that's another 42%. There's a couple institutions that also own positions in McEwen Copper, which is a private company. So the only way for investors to invest in McEwen Copper is through McEwen Mining. And I think that McEwen Copper has a tremendous future ahead of it. I without a doubt, their deposit will be a future mine, very lucrative mine, very long-lived mine. And these are the assets that are needed for the car companies that are transitioning to electric vehicles. they need the copper supply, and there's not enough of it. I don't think that people really understand how tight the market is for supply of copper to meet demands. Inventories at the warehouses, metals warehouses, are at historically low levels, and that's representative of the future. Copper mines can't be turned on just like that. Cars are being made that need copper, but you can't just turn the supply on. And I think copper's headed a lot higher. And a company like McEwen Mining that owns an asset like McEwen Copper gives investors an opportunity to have exposure to gold and to copper. And I'm very bullish on those two commodities. And as you can see, the market is getting more and more bullish. I think I said bearish earlier. I'm very bullish on copper and gold. As you can see, the market is very bullish on McEwen Mining. And I think they've got a lot higher to go, because even with this big move, they still have a tiny valuation relative to the quality of the assets. In fact, I see exploration companies with no mines, no resources, no preliminary economic assessments that are trading at significantly higher valuations than McEwen Mining. So I think there's a lot of blue sky ahead for McEwen Mining. Now, I'm going to talk about Dynasty Gold, who is a sponsor of my shows. And the reason that I'm going to talk about Dynasty right after talking about McEwen Mining is that Dynasty had important news out recently that they're doing a private placement to raise funds to get back on their Thundercloud and start drilling on their bonanza grade orogenic gold system that they hit that caused this big move. And Rob McEwen is participating for 1.2 million of that private placement that's happening right now in Dynasty Gold. I think that's a really important event, because this is an orogenic gold system, and it's not very far from Red Lake. And Rob McEwen is the guy who found the Red Lake mine, the bonanza part of the Red Lake mine, through the Gold Corp challenge. He ran Gold Corp, and when he was running it as a mining when they were mining that bonanza stuff at below 1,000 meters of super high grade gold in an orogenic gold system, Rob knows a tremendous amount about orogenic gold systems. And so what's really interesting is this company is only a few holes, 4 holes into jewelry box bonanza grade hits of gold in an orogenic gold system. So far, they have 4 holes that are lining up for about 100 meters of strike, where they have hit high grade to bonanza grade gold in 4 holes. And so it's starting to show continuity, and also just off the charts high grade. One hit was 1.5 meters of 246 grams per ton of gold. And that was part of a 3-meter intersection of about 150 grams per ton gold. So they've got these 4 holes that are the dots are starting to line up, which shows continuity of the bonanza to high grade gold in an orogenic gold system. And then below that, they had another 3-meter hit of about 60 grams per ton of gold. So it looks like they've got 2 stacked zones right on top of each other, and the possibility of more stacked zones, and that as they follow these 2 zones deeper, there's a good chance that they come together. Now, I think it's also important to point out that they're already in the first, they're only down about 200 meters. And that in an orogenic gold system is really shallow, because what these are associated with are very deep cracks in the earth, or faults, and those crustal cracks or crustal faults can go down for several thousand meters. And when you're high in the system, you're into the fine-grained gold. And in the fine-grained portion of that, of where they are, they're already getting bonanza grades in the fine-grained material. So as you follow that deeper, and you get closer to the heat engine or the heat source, the gold tends to get more and more coarse. And as you get into the more and more coarse gold, of course, the grades go up. And to have those bonanza grades in the fine-grained portion of an orogenic gold system is quite exciting. When you start looking at the depth potential is still wide open. And, you know, to have that good housekeeping seal of approval to Rob McEwen putting his money in this tiny little junior mining company, I think is quite a important event. And this will load up their treasury so that they can, the company can start aggressively following that bonanza grade gold that they've already hit close to surface in an orogenic gold system. I'm so bullish about it. I'm participating in their private placement as well. So my good housekeeping seal of approval is not nearly as important as Rob McEwen's, but nonetheless, I believe very highly in what they have found and where that will lead them. And that's why I'm participating in the private placement that they're doing, and also that they have become a sponsor since January. And I believe very highly in this company, and I like what they're doing. Okay. Another pick that I made a long time ago and have talked about many times since is Amex Exploration. They're an orogenic gold system company as well. They've had a very substantial breakout recently, and I'm quite intrigued by the fact that they have this area where they found their high grade zone that has excellent continuity of the high grade, going from surface all the way to below more than 1,000 meters of depth. Again, talking about these orogenic gold systems, these things go on forever. In fact, at Red Lake, they had to get down to 1,000 meters to get into the bonanza gold, and then it went on for another 1,000 meters. So they have an exceptional continuity in their high grade zone, but then around it, they've also found other high grade zones, and they're in very close proximity to each other. And then not too far to the east, there's two key faults. One's called the Perron fault, one's called the Normatal fault. And as you move a little to the east of where they've got this concentration of these high grade zones, those two faults come together. And that is a perfect rock preparation area where two faults come together. It breaks up the rocks a lot, and you got these deep faults that are, now breaking up the rock for very deep. And that's a perfect conduit for the high grade mineralization that they found in close proximity to where they found the high grade zones, is where these two faults come together. Now, they've been drilling into that area and have holes pending from that. And I don't think it's coincidental that, yes, we've seen a much more bullish market for gold, but something is telling me in this market action that they're hitting something serious to the east of their high grade zones. I think that news is probably ready to come out at any time now. So stay tuned for news on Amex. Next, I'm going to go to my own company, Advanced Lithium, where I'm the CEO and president and a big shareholder. We had been under a lot of pressure because of we have lithium deposits in Mexico, and Mexico started a national lithium company. And when everybody was hearing about that, they heard nationalization. They thought our deposits are going to get taken away from us. I did everything I could to inform people that the Constitution of Mexico is very strong. It has in it that the government is not allowed to retroactively change mining laws to affect projects in good standing. Plus, we have other things like the US, Mexico, Canada Free Trade Agreement that protects us as well. But nonetheless, we were under a lot of pressure, trading on average of around 2 cents a share for several months, July through January. Then things started to improve here, and we had quite a significant breakout. And what caused this breakout was that we announced that we had started discussions with the Mexican National Lithium Company about forming a joint venture to develop our lithium and potassium salt lakes in Mexico. And then we also announced in early March that we had acquired an option on 170 square kilometers of ground in the Bathurst mining camp of New Brunswick. This is one of the top 3 VMS massive volcanogenic massive sulfides, or VMS mining jurisdictions in the world. The number 3 had one of the biggest VMS mines in the world, was the Brunswick 12 mine on the eastern side, close to to Bathurst. We acquired a very large land package from Wolfden. Wolfden is very focused on their project in Maine. I believe it's a company making asset that they have there. I approached the company to find out if they were doing anything with their Brunswick Bathurst mining camp projects, and they weren't, because they were so focused on what's happening on their main project and in the state of Maine. And so we were able to structure a deal that I think is beneficial for both companies, in that they will be a 20% owner of our stock. So they have a big interest. They have other rights of first refusals and ability to keep participating in financings and stuff like that. So they will maintain an important position in our company, and which gives them access to our assets at the Bathurst mining camp. What makes these projects what makes the assets in the camp, the ground in the camp that we are acquiring it so important, is that there is 6 known deposits that were estimated back in the 1960s. So these are what are called non-compliant resources. They were done well before the National Instrument 43-101 regulations on reporting came in. But nonetheless, they were done by very good work, and they will help us to move forward. One of the key resources, non-compliant resources, is the Canoe Landing Lake resource, and that is was estimated at about 25 million tons. It's got zinc, lead, silver, copper, and gold in it. And what really excites me about that Canoe Landing Lake deposit is that the technical reports that were done on it believe that this is the debris flow from a primary VMS deposit. And so think of it like a volcano, if you will. As the lava comes out the top of the volcano and it flows away from the vent of the volcano, that would be the debris flow. And so as you get closer to the vent, you're getting closer to the heat engine or the source of what caused that debris flow. And the debris flow being 25 million tons is pretty outstanding, because that tells you that the primary VMS should be much larger, and from a very large deposit or resource already. And another important thing is, as you get closer to the source, the grades often get much higher. And so the Canoe Landing Lake, I think at this point in time, would have to be considered the jewel in the crown of the projects that, or the ground that we have. But there's also these other resources that need to have more work done on them. In the northern part of the claims, there's a cluster of massive sulfide boulders that have very high grades in them, and the bedrock source of those boulders has never been found. So that's another important area. All of these other deposits are important to do more work on. To the north and west of the Canoe Landing Lake is called the California Lake Projects. And on the California Lake Projects, there has been epithermal veins found and drilled into. And when you're in an epithermal vein, it's important to find the boiling zone of that epithermal vein. And when you hit that boiling zone, then you can start to expand from there. And they've already hit bonanza grades of silver. Wolfton did at the California Lake epithermal vein system. And so we sort of know the level to where to go to expand on that. And then these epithermal veins, they occur in clusters. So there's potential to find more of these epithermal veins. And because we have a marker of where we found the boiling zone, we'll know how the depth to go after the boiling zone in any other epithermal veins we find. And when I started talking about the Brunswick mining, or the Bathurst mining camp, I mentioned that the granddaddy of the big monster of the mine was the Brunswick 12 mine. Not very far to its south is the Brunswick 6 mine, which was also an important mine. And then over south and to the west is the Heath Steel. These are all three very important mines in the jurisdiction. And the rock packages that continue from Heath Steel up through the Brunswick 6 and the Brunswick 12, we have ground right beside Brunswick 6 that extends fairly significantly to the south and to the north, and that's in close proximity to the Brunswick 12 mine. And so you've got this big land package, and all the rock packages that are where those deposits came from are on our property as well. So that's another key asset that we will have to explore. So the California Lake area gives us exposure to epithermal veins, high grade gold, silver. We've also got the base metal component in the Bathurst mining camp. In our lithium projects, we have access to lithium, which is important for electric vehicles. And then into the in the northern part of Mexico, in the Sonora mining camp, we have a 55 square kilometer project that has two underexplored epithermal veins on, and I don't believe that the boiling zones of those veins have been found yet. But why it's such an important project is that to the immediate south is the Las Chispas mine of Silvercrest. And that's a phenomenal mine. It's very low cost, under $10 an ounce to produce it is probably where the numbers will round out as they get into the first few quarters of full commercial production. And then they've got a very high grade, over 700 grams of silver per ton. So you've got high grade, low cost. These create our cash flow machine, free cash flow machines. And then to the immediate south of that, you've got the Ermitaño mine. So in this 40 or 50 kilometer corridor, you've got Ermitaño, which is one of First Majestic's best performing mines. To its immediate north is the Las Chispas mine. To its immediate north is our Serape project. And then over to the west is the Mercedes mine. So we're surrounded by important mines. And we've got an excellent land package and underexplored epithermal veins and the potential to find more. So we've got a great group of assets and a tremendously cheap valuation at only, I think, less than $4 million as we speak. And I think we've got some blue sky ahead of us. I mean, my basic argument is that the collection of assets that we have are potentially worth multiples of our current valuation. And how I would make that argument is just to do the work in the Bathurst mining camp to show the resources that had been done, you're talking multiples of our current valuation, and we benefit from that work. So you take that, we've got lithium, you take the gold and silver potential near the Las Chispas mine of Silvercrest. Then we've got a large land package in New Brunswick in the Bathurst mining camp. And I think we've got the potential to have the best ground in that entire camp that is currently being explored right now by other companies. That's my case of why I think advanced lithium is so undervalued. Just getting into the first 5 companies that I wanted to talk about in the trends, I've already gone longer than I wanted to. I've got a group more, so stay tuned over. I'm going to deal with more of them tomorrow, Sunday, and more of them I'm going to have to do it on Monday as well to keep talking about all of these companies that I think are well positioned to take advantage of what I started the show by talking about, which was my bullish argument for gold, silver, and other metals. I really think we're in a perfect storm where the rising tide is going to lift all boats, and some companies are going to significantly outperform those other boats. And I've got a group of companies that I believe will be those outperformers. And there's about 25 of them that I follow very closely. Now, they're not, they're different assets for different kind of investors. For those investors that want less risk and exposure to gold, silver, copper, I've got a group of companies that I follow there. Other people will want, different stages of exploration and development companies. I have a wide array that fill those categories. And so I have a bunch that I follow. For example, I have a bunch of companies I follow in Nevada. Some people love Nevada. I've got some that I follow in Mexico, some that I follow in Canada. My main focus is in North America, Canada, the United States, Mexico, but then I've also got some projects in South America that I'm very high on as well. But that's sort of the bulk of my picks are in North America, but I also have some picks in South America. Oh, I made a long story, I made a short story long. I don't know if I did or didn't, but here's a group for you to check out today. Stay tuned for my show tomorrow and the next day and my future shows. As always, my shows are for information purposes only. Important for you to speak with your financial advisors before making any investment decisions and do your homework. All of these companies that I talked about today, I've interviewed on my shows, or in the case of Advance, I interview myself, I guess I would say. I try to answer the questions that I get asked for Advanced Lithium. Yeah, do your homework. Check out the shows I do on YouTube at Rocks and Stocks News to help you do that homework. Go to their the company's websites, check out their news releases, check out their corporate presentations, and do that homework. It'll make you a more logical investor and not one of these investors that get bound down to what the day-to-day fluctuations in stock prices and tend to make emotional decisions. Logic is the best way to go. On that note, have a great day and we'll talk to you soon.